Lithium Americas stock had another tough session on Monday, closing down by 59 cents, or roughly 9.3%, at $5.74 per share. This comes after a breathtaking week in which the stock doubled on Wednesday, gained another 22% on Thursday, then slid sharply on Friday. Investors are now trying to make sense of whether Monday's move signals the end of the rally or just another step in a healthy reset. Tonight we're going to walk through what happened, why it likely happened, and what to watch next. To understand Monday's drop, we have to go back to what ignited the rally in the first place. Midweek, multiple credible outlets reported that the U.S. government under the Trump administration was exploring taking up to a 10% equity stake in Lithium Americas. That news was remarkable because it suggested that Washington might move beyond lending support to direct ownership in a strategically important lithium project. The company already has a $2.26 billion Department of Energy loan for its Thacker Pass project in Nevada. If the government were to become an equity partner on top of that, it would dramatically change the risk profile of the company and potentially accelerate its path to production. That's why the stock exploded higher on Wednesday and Thursday on record volume. By Friday, though, the mood began to shift. Without an official statement or confirmation, and with the stock extremely overextended after near tripling in just 48 hours, profit-taking set in. Traders who had been sitting on quick gains began to sell, short sellers started probing new positions, and momentum began to unwind. Friday's 14% pullback was the first real test of whether this story was sustainable. That brings us to Monday. The stock opened weak and stayed under pressure throughout the day. The reasons appear to be more mechanical and psychological than fundamental. First, momentum reversion. After 2 parabolic days, Lithium Americas was deeply overbought on every technical measure. Quantitative strategies that chase strength on the way up often flip to sell signals once momentum breaks. With no new catalyst to reignite buying, the natural direction was lower. Second, the absence of fresh news. The story that drove Wednesday and Thursday's rally still exists but remains unconfirmed. No new leaks or filings emerged Monday to reassure investors. Without reinforcement, doubt creeps in. Are the talks real? Will the government follow through? Could the structure of any deal be dilutive? These questions weigh on sentiment, especially for latecomers who bought near the highs. Third, stop losses and technical triggers. After such a big move, many traders tighten their stops. When prices break through key levels, automated sell orders fire, accelerating the decline. Monday's drop through the $6 area likely tripped a cascade of stops, adding fuel to the sell-off. Fourth, profit-taking by short-term holders. Some investors who jumped in on Thursday or Friday may have decided to lock in whatever gains they had left or cut losses before things slid further. This churn of fast money can amplify volatility when combined with overextension and stops. Finally, broader risk sentiment. While Lithium Americas has been trading on its own story, weakness in speculative and high beta names more generally can spill over. If the broader market tilts risk off, LAC is unlikely to be spared. It's important to point out that, as of Monday's close, there was no confirmed negative news event that singularly justified a near 10% drop. The central narrative, possible U.S. government equity participation, remains publicly intact. But rumors without confirmation are fragile. When traders sense that the window for confirmation is stretching out, they reduce risk. That's what we're seeing. The optimistic view is that even after 2 days of selling, the stock is still dramatically above where it began the week. The shareholder base has shifted. Volume has put the name on every momentum screen. The possibility of government equity has gone from obscure to mainstream. Investors are no longer valuing Lithium Americas solely as a speculative miner, they're valuing it as a potential partner of the federal government in a critical supply chain project. That perception shift raises the floor for the stock even as it consolidates. For long-term investors, Monday's pullback may represent more of an opportunity than a warning. In a story like this, big moves rarely happen in a straight line. Explosive rallies attract fast money takes profits, consolidations form new bases. If the government stake story is real and leads to a favorable deal, the next official communication could reignite buying interest and propel the stock back toward its highs. Until then, expect volatility and wide intraday swings. It's also worth remembering the fundamentals underpinning the narrative. Thacker Pass is projected to become one of the largest lithium sources in North America, with Phase 1 targeting 40,000 tons per year of battery-grade lithium carbonate. The company already has a $2.26 billion DOE loan to fund the build-out. General Motors holds a 38% stake in Phase 1 and rights to the initial offtake. These are tangible commitments. What's uncertain is execution, ultimate costs, and now, how a government equity stake might be structured. That last piece is crucial. The rally earlier this week priced in not just the possibility of a stake but the assumption that it would be favorable to existing shareholders. But the terms aren't known. Will the government buy shares on the open market or directly from the company? Will it demand warrants or preferred stock? Will it attach conditions to the loan? Each scenario has different implications for dilution, governance, and future financing costs. Analysts have begun sketching out these scenarios, and as they do, investors are reassessing risk and reward. That reassessment is part of what we're seeing in the current pullback. From a technical perspective, Monday's close at 574 puts the stock back into a zone where it may try to build support. Before Wednesday, it had been stuck under $4. Now, even after a sharp sell-off, it's holding well above that. That suggests a higher floor and a shareholder base with more conviction than before. But without confirmation, the stock could still test lower levels. Traders will be watching whether it can consolidate between 550 and 650 as a base for the next move. So how should you think about this as an investor heading into Tuesday and beyond? The key is to watch for official confirmation. An SEC filing, a press release, or a statement from the Department of Energy would be the ultimate catalyst. If we see acknowledgement of talks or details on structure, that could stabilize the price or spark a reversal. Conversely, a denial or an unfavorable leak could push the stock back toward pre-rally levels. Until then, volatility is likely. Watch also for comments from General Motors. As the joint venture partner, GM will have a say in how any government stake is structured. Their cooperation or resistance could shape the outcome. And keep an eye on lithium prices and sector sentiment, because while policy support helps, the economics still depend on commodity markets. All of this sets up a compelling Monday close narrative for viewers. After 2 days of euphoria, LAC has cooled off again. The tension is whether this is a healthy reset or the start of a reversal. Your audience wants to know whether to be scared or excited. By walking them through the story, what drove the rally, what drove the pullback, what the risks are, and what the next catalysts might be, you give them a framework for thinking about risk and opportunity rather than reacting emotionally to each headline. The big picture is that Lithium Americas has become a bellwether for how the US approaches critical minerals. The fact that a government equity stake in a lithium mine is even being discussed signals a shift in industrial policy. LAC is the test case for how far Washington is willing to go to secure domestic supply chains. That's why this story matters beyond one stock. It's a microcosm of the tension between markets, policy, and speculation. As we head into Tuesday, the story is far from over. Friday and Monday's drops are not a death knell. They're a reminder that volatility cuts both ways and that speculation needs confirmation. If the government stake materializes on favorable terms, LAC could be entering a whole new era. If it doesn't, the stock will need to find a sustainable valuation based on its loan, its project, and its partners. Either way, it will remain one of the most watched names in the market in the days ahead. This is the kind of moment when risk management and patience matter most. Recognize that rumors can drive massive moves but also reversals. Understand your time horizon. If you're trading short-term momentum, respect your stops and position size. If you're investing long-term on the thesis of a strategic project backed by major partners, remember that the underlying fundamentals have not changed overnight. The next catalyst will be clarity, and clarity will decide the next move. So to wrap up, Lithium Americas stock fell nearly 10% Monday after a historic week. The drop appears to be part of a natural unwind of overextended momentum rather than the result of any new negative development. The central narrative of potential US government equity involvement remains in play but unconfirmed. The stock is still dramatically higher than it was just a few days ago. The next few sessions will reveal whether this is simply a pause before confirmation or the start of a deeper reversal. Stay tuned, manage your risk, and watch for the signals that matter.